Hi, is everyone still awake? Show of hands, everyone who's awake. Appreciate you hanging out today on the second day. My name's Tom Meredith. I'm the CEO and founder of Smart Token Chain, and I'd like to chat a little bit today about what we're doing in terms of being able to tokenize and to be able to expedite today's settlement process with an idea of moving forward into the future with blockchain as they become more and more prevalent. Executive summary, safe harbor statement. We are in the process of going to Wall Street, raising some money, so our bankers asked us to put this up, and it's fine print, so you can't read it. What we do is we're trying to expedite and go from a T+2 world to a T+0 world. And the way we believe to do this is with smart tokens. Tokens encapsulate identity, assets, and all the things that lead up to an exchange of assets via an execution token. So back in the days when there were folks were just starting to do transactions, two guys would walk up to each other on a beach. One guy would have seashells, another one would have fur pelts. They'd point, grunt, hold up fingers, snatch the respective assets out of their hands. Things have not changed much since then. So what we're doing is we're looking at these assets that are not necessarily ready for QSIP numbers. So outside the bonds and the stocks areas, you're looking at all types of assets that eventually will probably have specific blockchains per some of these assets. But today, there are traditional ways to trade bonds, stocks, other assets that we believe we can speed up the process, take all that settlement time that it takes to do the paperwork, both pre and post exchange or execution, and that we can compress a T+2 process via smart tokens into a T+0. So as you may see, this is the way it's done today in many cases. We've gone away from paper, but there's still a T+2 settlement process because of a lot of regulatory hangover from the old days. Today, everyone has a blockchain. You've got a blockchain, and you've got a blockchain. Everyone has a blockchain, and they're all trying to standardize around a blockchain. We just went to the blockchain conference yesterday. Everyone's excited, a huge room full of regulators and full of people very interested in blockchain. Blockchain is the future, there's no doubt. But we see our smart tokens as being the bridge between the traditional clearing and settlement world and tomorrow's blockchain. So we're looking at a number of different vertical assets that we're tokenizing. And what we've done for the last year and a half is we've been using our own technology to expedite foreign exchange, primarily in the remittance space for peer-to-peer remittances. We started a company called P2P Cash, and because we're taking so much friction out of the process while still maintaining a high level of anti-money laundering and regulatory compliance, we're actually able to send money to any cell phone virtually on the planet very shortly at no cost. We've got 69 countries under contract, and we're building them out slowly but surely. We're partnering with MasterCard, SWIFT, and one of the largest banks in Africa has been our test case for the last year. So we're very confident the technology is working and it's scalable. So the whole idea here is that ISO, who all here knows what ISO stands for? Excellent. It's the International Standards Organization. And just about every ATM point of sale transaction is an ISO dictate of 8583. Just about every core banking system is ISO 15022. ISO standards set the standard for container ships 40 years ago. So ISO plays a huge role on a global basis in setting international standards, much as the name implies. So what we're doing is we're leveraging these new standards that have been around for a decade. The banking industry, as you probably all well know, is very, very slow to adopt technology, new technology, and to adopt change in general. So it takes time for these standards to permeate the industry and for the banking industry to even see a reason to dedicate the technical resources to make it happen. So we're 100% ISO-based as much as humanly possible. We're going to be adding extension as we see necessary to bridge to the blockchain world, but ISO, ISO, ISO. So we see this new 20022, because it's XML based, that allows you to have a lot of flexibility to create a messaging format banks will accept. And then what we're doing is we're putting pointers into the tokens themselves, are actually pointed inside the ESA 20022 message, where there's a lot more information. We couldn't shove it all into the message format, but they've got user-definable fields that allows us to put a pointer in there where there's a contract or where there's an ID token or an asset token or there's an XML script that gets enacted that we can verify an asset, an ID, or an exchange. So what we're looking at is different vertical markets to add value in. I mentioned the free money transfer and we're also looking at P2P lending. We think P2P lending is a perfect way to monetize. If I loan money to Don, I may want to get my money back. Don can't give me the money back. He can sell it on the exchange if there's some sort of P2P lending exchange, which we see in the future. There'll probably be a P2P blockchain at some point. So we're simplifying complex transactions because we're breaking them up into pieces. We're breaking them up into tokens that can be independently created, verified, stored, and reused. So that's the whole idea here, is that we're trying to take these ISO standards, add some smartness to them, if you will, try to, again, make the traditional or the existing settlement process faster, cheaper, better, reducing margins, but making these brokers, exchanges, and banks ready for the new world. So what we do is we put various tokens, the identities, the assets, the execution information into one master token that can then route or settle over SWIFT, MasterCard, mobile money, wallets. There's a lot of wallets over in the developing world where, again, that's been our expertise for the most part, has been sending money directly into mobile wallets and bank accounts with our partners SWIFT and MasterCard. We've also done an integration in Ripple, so we have blockchain experience. We're not a blockchain company ourselves, but the whole idea is as these blockchains emerge, we'll be ready to not necessarily become a blockchain, but to be able to write out a settlement to meet blockchain settlement specifications. So this gets a little bit more specific, and we have a demo available at the booth. We're halfway down between the two stages, so if you want to stop by, you could either see myself or Don Chapman is over here. Don, you just want to raise your hand? He's the smart guy here. They tell me to stand up and talk about these slides. So bottom line here is, again, two guys on a beach, seashells, fur pelts, exchange rate. Those are the three major asset classes or token classes that we're talking about here, where you pre-fill in the information for who I am, who your counterpart is. Every broker has that information. There's a strict onboarding process. We take that data, put it into a token. It gets encrypted. Only the people who are allowed to see that information can see that information. So it's a reusable token that can transfer between settlement systems. Pre-execution token. A lot of information goes into this. The execution token itself, how many fur pelts for how many seashells. And a lot of information that, again, we can give you a full-blown demo. We've built this out. It's up and running. We've got several use classes we're working on. The assets, your asset, my asset, euros for dollars, euros for oil. We're working on with a Chinese bank to do an electronic version of the RMB. And they want to supplant the USD as a settlement vehicle. If we can do it faster and cheaper, i.e. instantly, that gives them advantage over the 2 days it settles for a USD trade. So all that onboarding, all that pre-execution, all that execution token, then you add a settlement token. And this is where it gets interesting because all that information, we couldn't fit it all on one slide, but this last slide feeds into, you can see little tiny arrows there, feeds into the master token. So this master token has all the information regarding that trade, who the people were, how many fur pelts, how many seashells, the market conditions at the time. This can be used to ferret out rogue traders if someone's doing trades outside the normal band at that time and date. We can find all this out because all this gets stored for posterity inside a master token. And then when blockchain does become available or does get standardized in a particular vertical asset market, we can very easily pull out the settlement token from XYZ standard broker. Let's say we're working with the DTCC right now to try to standardize this. You pull that out and say, okay, fine, we're going to adopt the blockchain settlement process. So again, here's another way of looking at it. Person A with asset A, person B with asset B. They meet, smart contract in the middle, swaps the assets after all the verification processes have been done. Again, there's a lot of tokens inside these of independent verification. And then it gets written out to on the settlement process. I get a copy, my counterpart gets a copy, and then we can write it out to any blockchain system you'd like. We see a proliferation of blockchains, and everyone's taking a proprietary means to create a proprietary real-time settlement system. I mean, it makes sense. That's been the beauty of Bitcoin, and that's why so many people are enamored of this technology. It gets you past all the regulatory hurdles as long as you're basically KYCing everybody, making sure that the assets are there, doing the verification, writing out copies. That's blockchain. We say blockchain is easy, tokens are hard. We've got two guys that have spent half a century on Wall Street helping us to develop these tokens, and it's taken them 6 months to get where we are today, and we're still coding out what they're telling us we need to have. So basically, we believe there's going to be a tremendous amount of blockchain proliferation. We believe there needs to be some sort of standardization, not only within the traditional settlement world, which again ISO helps and improves, reduces the T+2 to TO, but if you're going to bridge it over, this is a way to do it, again, using ISO standards. These are some of the use cases that we've identified. We've done already remittances. We're working on an AR application, which is leading into a corporate invoice application. Huge, huge, trillion-dollar opportunity to turn over corporate assets quicker, faster, get them paid quicker, have better controls. We hear fraud is a big issue. So we're working on that model with someone very adept in this space. And then we've got oil and gas interests from China, from Venezuela, the eRMB we talked about, electronic version of the RMB. We're working on a bond deal, and we're working on a gold deal. So we're looking at different vertical assets outside of the one we've built out for the last year, which has been the remittances for individuals. We got a great team. We're very lucky to have some of the people have been involved with. Peter Carruthers, again, has been 25 years. We brought another fellow on. He's been his buddy on the trading desk for many, many years. So between them, they got a lot of experience. I mentioned Don Chapman. He's a FIS background. He's really helped us to pull it all together. And Morris Wanga, our CTO, built the largest foreign exchange platform in Kenya, where M-Pesa, by the way, is used by almost everyone in Kenya and is over half the GDP of that country. It's a model for mobile wallets going forward. We've also got Lenny Schrenk, who used to be the CEO of SWIFT, advising us, and we've got Brian Smith, ex-general counsel for MasterCard, and as well as the OCC, and a fellow who was in the PayPal early days. So he's, again, we've got a great advisory team. That's really all I have to say. Bottom line, I'd just like to reiterate, blockchain is easy, tokens are hard. I mean, we saw a blockchain company come out the other day that basically said, we can get the blockchain up and running for you in 48 hours. So it's possible to do. You saw a lot of altcoins come out when Bitcoin came out. We consider Bitcoin to be blockchain 0.5. And we have a patent pending in this space that talks about asset movement with security and with smart contracts built around it, which we believe will give us some intellectual property protection in the space. And then I like to go back to the original slide that we really think kind of summarizes it. This is the past, the present, this is the future. It's fragmenting the industry, but we truly believe that ISO standards will do what they did for the container ship industry on a global basis, what they did for the point of sale and the ATM networks on a global basis, and that we believe that they will do the same thing for financial services to create a intermodal way to send ID, global ID is happening, global asset determination is happening, and of course the execution. How many fur pelts do I get for those seashells? So again, we're at the booth down on the side, on the right-hand side. If you would like to see a real demo, we can show it to you. Otherwise, please contact myself, Tom Meredith, or Donald Chapman, and we'd be happy to discuss how we can work together. And enjoy the rest of the day. Thank you very much.